Hey, I'm Kylie, I'm Finder's Investments Editor, and today I'm going to be looking at how Coinbase has performed since its IPO. I'm going to take a look at its financials, and I'll be chatting to a respected fund manager from Australia, Roger Montgomery. Okay, a quick summary of events. Coinbase is a cryptocurrency exchange from the United States. For those that are new to crypto, an exchange is a platform where you can buy and store your cryptocurrencies. It launched in 2012, but as of 2021, it is the biggest and most popular exchange in the United States by trade volume. And with around $223 billion in assets sitting on the platform, it accounts for around 11% of the crypto asset market share, which is pretty phenomenal. So there'd been rumors of a possible listing going back many months. But by the time the news of the listing was confirmed in March, crypto bullishness had reached a boiling point, with Ethereum, Bitcoin, Dogecoin and others reaching all-time highs, which is a pretty good time for a crypto exchange to want to list on the market. So finally, Coinbase began trading on the Nasdaq on April 14 in a direct listing, which is not actually the same as a regular IPO because new shares aren't issued. Instead, private shareholders and employees that own shares already then can sell them onto the market where they begin trading. So it's a little bit different. By the time it listed, Coin was set to be one of the most anticipated IPOs of 2021 and basically seen as a watershed moment by crypto enthusiasts the world over. Fast forward 1 month later, and the share price is sitting more around what the reference price was, which was around $250 as set by the company. So what about the financials? Coinbase was valued at around $6 billion as early as September 2020. But its value has since surged in line with the price of Bitcoin surging. Bitcoin, which has seen its price double in just months as of 2021. In the first quarter of 2021, Coinbase had an estimated revenue of $1.8 billion and a net income of between $730 million and $800 million, up from $32 million in the prior year quarter. That compares to all of its revenue in 2020 of $1.3 billion. That means Coinbase stock was trading at more than 14 times the annualized expected first quarter revenue. That ratio indicates that people are pretty bullish about where the company is going. So how does Coinbase make money? Coinbase makes money by allowing investors to buy and store cryptocurrencies on its platform. Because the fees are a percentage of the transactions that you make on the platform, the more cryptocurrency prices go up, the more money the company makes. But it still mainly depends on the revenue from Ethereum and Bitcoin trading. In 2020, those two cryptocurrencies made up more than 56% of all trades on the platform. So is it risky? Well, taking into account how reliant Coinbase is on the success of cryptocurrencies, yeah, I'd call it a pretty risky play. Okay, so here are some of the main risks. First of all, competition is intensifying, which will probably slim down margins. For example, PayPal, Square, and Robinhood recently introduced crypto offerings which directly compete with some of Coinbase's offerings. Also, Coinbase is exposed to unpredictable regulatory decisions, which could impact the cryptocurrency market and its main business. And of course, the company's profit results depend heavily on the price of Ethereum and Bitcoin. To get an expert opinion of it, I chatted to fund manager Roger Montgomery to find out where he thought the company was going over the next 12 months. Here's what he had to say.
The whole sector at the moment obviously has a bunch of things going for it. One of them is the popularity of cryptocurrency trading. That's one thing that's pretty exciting, but perhaps even more exciting is the possibility that an exchange operator like Coinbase can actually start providing cryptocurrency credit, borrowing and lending services in addition to just the trading services that exist today. So there's a runway for growth there, which is very interesting. But I think much of the hype relates to the fact that it's arguably the first exchange to list.
We've seen Coinbase start off from about 381 and fall down to, I think it's 250 last time I saw. I'll have to double check that. Everyone's asking, is it a good buy in 2021? Why or why not in your view?
Yeah, it's a great question. Look, the reality is that its profits are largely dependent on enthusiasm in cryptocurrencies, specifically Bitcoin. So, for example, in the most recent quarter, its revenue was 900% higher than all of the revenue it made the year before, the entire year of 2020. So it's profitable now, and it was profitable last quarter. Whether that continues or not is largely dependent on the value of these currencies and how popular they are. If you're buying Coinbase, you're not buying it because it's going to be the only exchange that everyone trades on. But what it is, it's a, if you like, a picks and shovel supplier to the industry. So the more popular these cryptos are, the more money Coinbase will make. Whether or not it's trading at the right value, given its profit outlook, that's another question. Look, there are aspects of cryptocurrency that appear to me to be completely silly. And the idea, for example, that Bitcoin is going to be a universal currency that replaces fiat money, I think is full of flaws. That's not going to happen, in my view. But we have seen an explosion of other really interesting features. For example, NFTs. And the explosion of NFTs pretty much this year is a really interesting aspect of the blockchain that I think we should be paying attention to. Each project on a blockchain, whether it's NFTs or something else, has its own currency. And the popularity of those currencies will be determined by the success and sustainability of that particular project. If you were to buy a property today, you would receive a title. It tells you the area of land that you own and which deposit plan it's part of and so on. But a digital version of that would have a lot more information, and that's pretty exciting. It would say that you bought it. It would say who you bought it from. It would say what was paid. If there are any renovations to that particular property, it might record that. And so digital non-fungible tokens, for example, have some of these features in them. And I think that's going to change the landscape for a lot of centralized deposits of title information and registries. And so that's exciting. Coinbase is tapping into some of that excitement, obviously, but as I mentioned a moment ago, they're not the only ones.
What digital coins are you most confident about, if any?
Look, I think Ethereum's an interesting one because of that NFT popularity. But the reality is there are currencies that don't exist today that will be developed based on structures or contracts that we haven't even considered. Their usefulness will become increasingly popular. It's just hard to know. Now, unfortunately, one of the difficulties is, and I think it's a negative, is that you and I can both launch a cryptocurrency in about half an hour. And so there could potentially be millions of these things flying around. And short of them just being used for speculating, I think most of them will fail. Most of them won't have legs. But it's important to know. All I'm saying is you've got to do a lot of due diligence on these things, which actually makes the exchanges more interesting, because the more currencies that an exchange is permitted to trade, or the more cryptocurrencies that are given to a particular exchange to trade, the more popular that exchange will be, and that's the one that could potentially rise to the top. Again, what do you pay for that? When they're not making any money, it's very difficult to work out what the right price is.
Roger, thank you so much for joining.
A pleasure. Good to be with you.
On the plus side, with no mainstream diversified ETFs on offer, Coinbase does offer a way to access multiple cryptocurrencies in one trade. But it's a leveraged exposure to a very volatile market. It could either be a very good play or a very bad play. Either which way you look at it, yes, there are risks, but there is also potential upside. Good luck trading. As always, this isn't financial advice. Do your own research and back your own decisions. If you like this video, don't forget to hit the like and subscribe button. Feel free to comment and I'll respond to any questions.